credit cards. We carry them every day. A quick swipe, a tap, and it's paid. But have you ever stopped to think about the history behind these little pieces of plastic? How did they become so powerful? This presentation explores the fascinating journey of the credit card from its humble beginnings to its current status as a global financial tool. We'll uncover how it evolved, understand the mechanics that make it tick, and learn how to use it to our advantage. Whether you're a seasoned credit card user or just starting, understanding the dynamics of this financial tool can empower you to make smarter financial decisions. So let's delve into the world of credit cards and unlock their secrets. Before the convenience of plastic, people relied on more rudimentary systems. Bartering, exchanging goods directly, was common, but as societies grew complex, so did their financial needs. Enter early forms of credit merchants, extending trust to customers, allowing them to pay later. This system, based on personal relationships, was a precursor to modern credit. The late 19th century saw the emergence of charge coins and cards, primarily used in specific stores or hotels. Customers could make purchases on credit, settling their accounts periodically. This marked an important step towards the credit card as we know it today. These early systems, while limited in scope, laid the groundwork for a more sophisticated credit system. It wouldn't be long before the modern credit card, as we recognize it, would emerge, revolutionizing the way we transact and manage our finances. The year 1950 witnessed a pivotal moment in credit card history, the birth of the Diners Club card. Frank McNamara, a businessman, found himself in a predicament when he forgot his wallet while dining out. This experience sparked an idea. McNamara envisioned a card that would allow users to dine at restaurants on credit, eliminating the need to carry large sums of cash. Thus, the Diners Club card was born. Initially a cardboard card, it was accepted at a limited number of restaurants in New York City. Diners Club acted as an intermediary, paying the restaurant directly and then collecting payment from the cardholder. The Diners Club card gained traction, particularly among businessmen and travelers. It provided convenience and a sense of prestige, setting the stage for the widespread adoption of credit cards. The Diners Club card, while groundbreaking, had its limitations. It primarily focused on dining and travel, and cardholders had to settle their balances in full each month. The concept of revolving credit, allowing partial payments and carrying a balance, was yet to emerge. In 1958, Bank of America launched BankAmericard, later renamed Visa, in Fresno, California. This marked a significant shift in the credit card landscape. Bank America had introduced the concept of revolving credit, allowing cardholders to carry a balance and make monthly payments with interest. This innovation revolutionized consumer spending habits. It gave consumers unprecedented purchasing power, fueling economic growth, but also introducing the potential for debt. Bank America's success led to other banks launching their own credit card programs, shaping the competitive market we see today. The business of plastic: how banks and companies profit. Credit cards, while seemingly simple to use, operate on a complex web of financial transactions involving multiple players. Understanding how banks and companies profit from credit cards is crucial to navigating this system effectively. Banks, as issuers of credit cards, make money through various avenues. The most significant is interest charged on revolving balances. When cardholders choose to carry a balance, they incur interest charges, which can add up significantly over time. Another source of revenue for banks is interchange fees. Every time a cardholder makes a purchase, the merchant's bank pays a small percentage of the transaction amount to the card issuer. These fees, though small on individual transactions, accumulate into substantial revenue for banks. Companies also benefit from credit card usage. They gain access to a wider customer base, as credit cards allow consumers to make purchases even when they don't have immediate cash. This increased purchasing power can lead to higher sales volumes for businesses. The interest trap: understanding the cost of credit. Credit cards offer undeniable convenience and can be valuable financial tools when used responsibly. However, it's crucial to understand the potential pitfalls, particularly the cost of credit. The allure of buy, now pay later, can be tempting, but it's essential to remember that credit card debt can quickly spiral out of control if not managed carefully. The interest rates charged on credit card balances are typically much higher than other forms of debt like mortgages or personal loans. Even seemingly small purchases, when accumulated on a credit card with a high interest rate, can take years to pay off if only minimum payments are made. The longer it takes to pay off the balance, the more interest accrues, ultimately costing you far more than the original purchase price. Understanding the concept of annual percentage rate, or APR, is vital. APR represents the yearly cost of borrowing money on your credit card, including interest and fees. It's crucial to compare APRs from different card issuers to ensure you're getting the most favorable terms. Using credit wisely, tips for maximizing benefits. Credit cards, despite their potential pitfalls, can be powerful financial tools when used responsibly. Here are some tips to maximize the benefits while avoiding common traps. Treat your credit card like a debit card. Only spend what you can afford to repay in full each month. This will help you avoid accumulating interest charges and keep your credit utilization low. Pay your balance in full and on time. Late payments incur late fees and can negatively impact your credit score. Set up automatic payments or reminders to ensure timely payments. Track your spending. Monitor your credit card statements regularly to identify areas where you can cut back on unnecessary expenses. Build a good credit history. Using your credit card responsibly and paying your bills on time can help you build a positive credit history, which is essential for securing loans and favorable interest rates in the future. By following these tips, you can harness the convenience and benefits of credit cards while avoiding the potential downsides. Remember, responsible credit card use is about making informed financial decisions that align with your overall financial goals. Rewards and perks, choosing the right card for you. The credit card market is vast and competitive, with issuers vying for your business by offering a dizzying array of rewards and perks. Cashback, travel miles, point systems, the options seem endless. Choosing the right card for your needs and spending habits can help you maximize your rewards and minimize costs. Before you apply for a new credit card, consider your spending patterns. Are you a frequent traveler, a big spender on groceries and gas? Once you have a good understanding of your spending habits, research different cards that align with your needs. Compare rewards programs, annual fees, and other perks to find the card that best suits your lifestyle and financial goals. Don't be afraid to call the credit card issuer and negotiate better terms, such as a lower interest rate or a waived annual fee. The worst they can say is no, and you might be surprised at what you can achieve with a little persistence. Staying safe, protecting yourself from credit card fraud. Credit card fraud is a growing concern in our increasingly digital world. However, you can take proactive steps to protect yourself and your financial information. Be vigilant with your card information. Never share your credit card number, expiry date, or CVV code with anyone you don't trust. Be wary of phishing scams that attempt to trick you into revealing personal information. Review your statements regularly. Scrutinize your credit card statements for any unauthorized transactions. Report any discrepancies to your card issuer immediately. Enable fraud alerts. Many card issuers offer fraud alert services that notify you of suspicious activity on your account. Take advantage of these services to stay ahead of potential fraud. Use strong passwords and enable two-factor authentication. Protect your online accounts with strong passwords and enable two-factor authentication whenever possible. This adds an extra layer of security, making it harder for unauthorized users to access your accounts. By staying informed and taking precautions, you can minimize the risk of credit card fraud and enjoy the convenience of credit cards with peace of mind. Conclusion: mastering your credit, mastering your finances. The credit card, from its humble beginnings as a cardboard dining club card, has evolved into a ubiquitous financial tool, shaping the way we transact and manage our finances. Understanding the history, mechanics, and potential pitfalls of credit cards is essential for navigating today's complex financial landscape. By embracing responsible credit card use, you can harness the convenience, rewards, and credit-building opportunities they offer. However, it's crucial to remember that credit cards are not a source of free money. Spending beyond your means and falling into the debt trap can have severe financial consequences. As you navigate the world of credit, prioritize financial literacy, stay informed about interest rates, fees, and your rights as a consumer. By making informed financial decisions and using credit cards strategically, you can pave the way for a secure and prosperous financial future.